exciting session as we are starting this new series of charting markets, which we get to learn from a CMT certified market technician how to actually build a winning portfolio with a simple systematic trading strategy. So without further ado, just let me start this session. All right. Just a quick intro of this session. This session is actually part of the Learning from the Pros series of education brought to you by CGSI. And in this series of education, we get a market expert to share with us their expertise, market outlook, trading strategies, and so on and so forth. And so far, we have brought to the table Kong Hao, Ho Seng Fu, who is a ex-CGSI International remisier. And of course, we have our very own Wei Ren. And before we start, allow me just to flash the disclaimer. So bear in mind that whatever we share tonight is for educational purposes only and are not trade recommendation. So if you do plan on taking any trade, do your due diligence and check with your financial advisors or brokers, right? So if that out of the way, just some quick admin. We'll be taking questions from you from the floor. So feel free to key in your questions on the Q&A box. Okay, so avoid putting questions in the chat box. As you can see, there's a lot of chat going on in the chat box. So if you do put your question in the chat box, you'll probably miss your question. So keep the chat to the chat box and then put all the questions in the Q&A box. And we will try our best to come to them towards the end of the session. And if you wish to speak out and ask questions directly, you are welcome to do that. Just click on the raise hand icon on Zoom. We can then unmute you and you can ask questions directly, right? So with that out of the way, let's come back to tonight's session. Charting markets beyond the guesswork. Building a winning portfolio with a simple, systematic trading strategies. And in this Charting Market series of webinar, we will be touching on how to build a simple and non-discretionary trading approach that removes emotion from the equation. As all of us know, trading can be very emotional, and a lot of times it is emotion that is our main challenge. So we can see how we can have a great system that allow us to manage our emotion and still do well in our trading. And of course, uncover valuable insight from the macro analysis and how to interpret all the analyst report that we will be sharing with us. Of course, learn how to use technical analysis for pinpoint entry and exits for your trades. And of course, putting everything together to build a winning trading portfolio for all of us. So with that out of the way, I'd like to introduce Wei Ren. Wei Ren is a chartered market technician and is a market strategist with CGSI Research. So over the last 12 years, he has been in technical analysis with the different companies, now with CGSI. I will not go into too much details on the profile here. I will just pass the stage now to Wei Ren, who can actually introduce more of what he does to you, and we are all excited to hear from him. So Wei Ren, please go ahead.
All right, thank you, Nixon, for the kind introduction and the whole CGSI retail house team. So today's series, don't worry, although just now the title seems complicated, no quants involved. Although I do a bit, I'm moving on to the quant space after taking up some quantitative finance course recently. So, but I think that is just a part and parcel of process of learning. All right, after CMT and then quantitative finance. And then as I was going through the quantitative finance course, I realized something that actually quants is just basically complex mathematical model, finding the pattern and then simplify it. All right, that's really the quants. All right, the reason why the market out there, they like, whoa, Black-Scholes model. All right, some binomial theorem, option pricing, some black scores. There's some models that I forgot the name. But it's just basically mathematical model that find the optimized thing, and then you have z-scores. You have value at risk kind of thing. But I find that all these complicated stuff, they kind of complicate things, and then people are like, oh, very turn off. Kind of like thing and all this. All right, so today is just purely from a top-down approach. I will show what is the thing that you all need to see. All right, so I think this memo I need to go through. I think Nixon will go through for me already, so I will go through that. All right, so what are the steps that actually you need to optimize your portfolio? If you tell me that you will go by, oh, I can go by technical analysis, I can go by fundamental analysis, and let's say I'm looking at let's say Sembcorp industry. All right, Sembcorp is not doing well, although today is the highlight of the chart. And Capricorn, they are not fantastic right now, not in play. All right, then you do a valuation. Hey, you think the valuation is cheap, is how many times the PE, I think is so cheap that I think I can buy it out. The next moment, it goes down. Then you look at technical analysis. Trend is up, but it has not made any new high recently. So in fact, it has been trending on the sideways market on this on the very large scale. So strong, weak, and then you need to see how the momentum. All right, technical analysis, quantitative finance, all this all on what you call it, on momentum strategies. All right, so how to really to narrow down your winning rates, how to narrow down like your gains. You really need to go from the top-down approach. All right, this one I learned from my CMT program. So they don't teach you all the candlestick pattern, finding or buy low, sell high. No, they actually have a systematic way to tell you what you need to do. So I think there's this thing called the top-down approach. So you need to start from the global macro outlook. You need to start obviously from the largest economy in the world, United States, and then followed by European Union, North Asia, ASEAN. North Asia means China, South Korea, Japan. And then South Asia, you can look at India. So, but India I won't go through because you can just take a look at how they're playing. But India market is actually locked from outsiders. So India market has a very big retail base. Just for info. All right. So after what's the global power play, look for the links. What are the links that do it? So for example, all right, the links are sorry. The links I would like to use always spotlight color was my bad. Okay. Okay, so what are the links? Like US, and recently for currency, anybody want to make a guess what currency is the most focused right now for the past 1 to 3 years? Anybody want to make a guess what currency is in play? Yeah, Japanese yen, correct. Yes, USDJPY. Okay, so if let's say on the side note, if you know the links, if you know that what is going on, then you dive into FX. What drive FX? Interest rates. And then dollar, US dollar, Fed fund rate is at 5.5 or 2.5%. Japanese previously negative, now they are back to 0, and then maybe next one back to 0.1. Doesn't matter. Positive carry, I long dollar, I short the yen. This is called carry trade. All right, we all look for this. So this is the USD. So look for the links, and then you dive deeper into it. All right, what is the next one? All right, if currency you have done, you are not looking at currency, it's okay. You're not familiar with the foreign exchange market, don't do it. You can just actually look for the equities in that. So why Nikkei 225 has been making new high? Because of cheap yen, borrowing cheap yen. I invested in the Japanese company to get back the alphas, and then I repatriate all my profits back. I gain as well. But if the carry trade unwind, then that will be a total disaster. We can go into this, but it will not be the focus of today. Or else I will go into or else this will take like 2-3 hours. All right. Okay, so once we find all the major news storefront, you do not need to have Bloomberg, Bloomberg terminal that we have. In fact, I don't really use Bloomberg terminal nowadays. All right. All this. So but we can go start once we can start going to the chart. All right. So and then once you know the link, you go to geographical analysis. Which country is leading? TAIEX, COPC, Nikkei 225, and KLCI. All this. So when I was typing, these one are all the leading one. All right. So once we know, okay, which country is leading, then this one will go into my intermarket analysis. Okay, so why intermarket analysis is important? So, truth be told, institutional investors like the hedge fund, like Bill Ackman, Ray Dalio, all of them, they have to be fully invested. All right, they cannot hold certain amount of like if the market is not doing, I hold cash. Yeah, like I can't hold cash for very long. They not me, they can't. All right, so they need to find which the next sector, which sector is going to bottom out, which sector is going to be the next one in play. Like right now, currently, what is in play? Anybody know? Any sector that's in play? Anybody want to make a guess? AI. Yes, everybody knows that because it's that. But is AI stock still going to go higher? We don't know. All right, but it's oversold. So later on, I will tell you what are the steps that I will say. Hey, can we invest? Are we going to exit? Fully exit, trim, or carry on? All right. So we know that. So based on all this, large fund will need to know which one is the next sector. So for now, Hong Kong energy is topping out. All right, telco is back on Hong Kong. All right, I cover the Hong Kong market a lot, and I really love the Hong Kong market a lot because when Hang Seng down, I pick the right sector for my transporter. I have an edge over. I have the alpha, so I do not tell people, hey, all sort of excuses. All this we have. All right, so okay, so for the next one, okay, so asset rotation. So fund managers also not everything in equities, so some of them will need to hedge their position. So some of them will have additional returns from, so like let's say AI, they want to hedge their their position, they want to get more alpha, they will go into right structured products, all this like TDS, total default swap. That instrument particularly is the one that killed Credit Suisse because of Bill Huang. All right, you can search up story. Very interesting story. All right, so equities, bonds is during some certain things, all this I mean the bonds, commodities, and currency as well. All right. Sorry, I do use Bloomberg nowadays for my FX thing, but it's just that retail investors don't really have the access to terminal. So I do, I can recommend certain things like, your Financial Times is good enough if you have a subscription, all right, to do. Look at the chart. So my session is planned to be using available public information to actually gain an edge, all right. So what I want to say is Bloomberg can be an additional tool, but it not necessary. If you have, good, but if you do not have, yeah. So you can use your broker, your spot rate, your spot chart, all this as well to to see. All right, so I carry on. All right, so individual asset class will have rotation as well. Like just now I played in dollar, yen, pound, and then some commodities. Recently cattle prices like those poultry products like cattle rose back to the uptrend. Why is because of swine flu ticket that's ongoing. And then equities, what are sector? Tech, energy, telco, etc. But today we shall not touch on FX. All right. So I won't go far into it. All right. So on this. All right. So right now we focus on equity and sector rotation on this. Okay, so basically some news I have known that are shown previously on this. So Japan is still very gloomy despite the long-term growth. Why? Is because their hands are tied. The BOJ, they raise their interest rate. They don't raise their interest rate. They are to intervene in the currency market, not useful as 2 years ago. And then they are weakening yen, high energy prices, crude oil prices has back into the $80 region, and it's priced in US dollars. So it caused the Japanese government to be hand tight. Although Japanese inflation came up, but if you minus off the energy and food, their inflation is actually stagnated on this. All right. So China is the next one that I've been watching since May. Showing sign of recovery, and it's shown in the Hang Seng Tech Index, Hang Seng Index and Hang Seng Tech. But Hang Seng Tech today just back into the bearish sentiment. So we shall see. All right. Another thing that you can see that for the if any Malaysian here, you can sound out in the chat or what. Malaysian market has been doing very well recently. All right. Start of this year until now. Although there's some slight correction through the KLCI, but I think that companies like Gamuda, YTL Corp, all this has been doing very well on this. So the geopolitical risk. Okay, so this is the news that we need between the East and the West, particularly China and US, has contributed some opportunity to ASEAN region, particularly in Malaysia and Singapore. Indonesia, not much. Thailand still on the downtrend, rebounded, but not strong. So for Singapore, banks continue to be the key overweight counters to hold for the long term. Although you can see recently, for the past 1.5 months, 1.5 months, it is very range bound. All right, but why range bound is because there's no strong sellers. There's no strong sellers, and who are the strong sellers? The institutional funds are not selling. Because banks are proven to be a key yield drivers, all right, for their portfolio. And traditionally, the REITs are the one that provide the best yield so far, which I don't believe, but they are. I don't know why, but because of the high gearing by the interest rate set by the Fed, so that's why the REITs has very much beaten down. So that's why I avoid the REITs for now. So another thing that recently that when Lawrence Wong take over, what are the sector that's in play? Anyone want to make a guess? You can type in the chat. All right, if you want. All right. While I continue talking, anybody want to make a guess? What sector? To talk about it. All right. Shipping. Shipping because I put here. All right. But shipping a bit overbought already. All right. Green energy, yes, but one thing, construction, infrastructure. All right, when election come, you going to come, they will pay your blocks. All right, that's why ISO teams. You got and Lei Chun, green energy CH. Yes, you're good. Lei Chun is the one that that's proven to be a very strong one. All right, because they do underground tunneling, all this. So Lei Chun has profited a lot. It's part of my transport pick as well. All right. Okay, so this one I have talked about it. Singtel rose a bit, rose very high, where market is beaten. I think because of the limited scape in the Singapore market, right? Everybody are flowing to Singtel. Singtel just break a new high today. Very strong parabolic move, which I will see you later. Special NIO new I would say special because they are really large cap special. Transportation, SIA went up. Sets, I think there's one more play. SIA engineering, all these are the one that will benefit. Overweight includes Samsung industry and Capital Corp, but these two are likely to be let me see. These two are likely to be long-term play, long-term. So I won't I overweight because my research team, my head of research overweight them. She covers them. So long-term, and then looking at buy once the signal buy with signal. Okay, sorry, pardon my handwriting. SIGR. Okay. So both sit come on. Then next one is Lei Chun. QOX. Okay, Lei Chun, my favorite. Then ISO team as well. Okay. Okay. So wait, I need to wrap off this one. Okay, so these are some visualized things that I find on the net. You can find this always on the net. You can take it as a reference. Stuff as a guide is not it's not like absolutely it's going to happen. All right, I can show you the next chart why you know that the business cycle runs, but you know sometimes commodities and bond stocks are moving in tandem. So we are currently at this level. All right, commodity stocks. All right, so commodities coming up, so we are at this level, stage 3, and then stage 4 when bonds actually tank. All right, where the rates actually tank, then we can see that we are stage 4 on this. All right, so this one I will leave it up. I won't, because of timing issue. Let me see the time. Okay, then I shall go a bit faster. So you can take picture of it. All right, I'm going to talk, and then before I will move on, I'll talk. I'll let you all. I'll ask you all if you all need more time. All right, so you can read this, and then you can take picture of it, snapshot, snippet, or what. It's okay. All right, or you can rewatch. All right, I won't go much on this on this. So this one especially is like stage 1 is normally the bottoming out. Stage 5 is always the topping, and then stage 6 is the one that is going to the downturn, the end of the business cycle. So one typical business cycle lasts 8 to 10 years. All right, and then there's one more cycle that is very popular. It's called a presidential cycle, happen 4 years. So the 3rd year of the presidential cycle is always the market is very, very strong. All right. That's happened in 2007 when before Barack Obama and what's the McCain? Is it McCain? John McCain. All right, the senator who passed away like 4 or 5 years ago. All right, so this is the one that get it. Okay, so before I move on, do you still need more time to see? All right. Do you still need more time? Or I can move on? Type in the chat. All right. Hi, are we in stage 4 moving into stage 5? Currently, I think that we are still in stage 3. All right. But we are still maybe stage 3 at the top here, going to stage 4 going here. All right, we shall see. All right. We are not because the bonds, the rates are still on the rise. Going on. Maybe going on to stage 4 already. All right. Because commodities just peak. All right. Okay. Okay, so country index. So this is one glance that I know what are the index that's moving. All right, so what a particular time is it used to be 2009 when rates are dropping, equities move higher. All right, and then you can say, hey, I'll just keep on buying. This period between 2009 to 2020 is the period where they weather what happened during the time after the financial crisis. Very famous. Anybody want to make a guess?
Wei Ren Nixon here, sorry.
Yeah.
Looking at chart, can you explain to us what is there's 3 chart there. What's the first one, second one?
Oh, sure. So first one is actually a 10-year yield. The 10-year yield is the one that the interest rate. So why interest rate was dropping at the time? Because of quantitative easing. So yeah, CH, you know, QE. And then 2013 happened, one famous thing, all right, is the Fed suddenly said, hey, we maybe need to cut down on quantitative easing. So like going to QT, market go berserk. So this happened in 2013. The rate suddenly go up. All right, and then of course the rate normalized, and then 2018 they start to talk about quantitative tightening, and then rates goes up. 2019 rate hike start in September, then 2020 is the COVID, and then it goes all the way down. All right, so we see a particular, but right now we are seeing rising yields. and rising equity prices. And at the same time, 2020 onwards, commodity pick up and then corrected. But recently, commodities actually has broke out again already. All right, so interest rates start to move higher. Yes, but that's why I think Mr. CJ. Okay. So very good question that you asked. Okay, so just now the rate I was talking about rates, right? So okay, I don't move. All right, that I mentioned that we live in a particular time where this time around I believe the equities market is going to move in tandem with the interest rate. All right, the interest rate did see the drop, but it's not very significant drop compared to the rising yields. All this. All right, interest rate will interest rate continue to rise? Okay, this is my personal opinion. All right, September rate cut, if there is going to be a Chinese saying, there's a saying 做戏 one for the presidential election. All right, it's just for show. All right, but there's something I read about this book called The Deficit Myth. It's very, very interesting book. If you have read the book, all right, please go please share with us. All right, this chart is for which country and for market? This chart is mainly the US, S&P 500, and the Treasury yield, the 10-year Treasury yield by the US government. All right, and then the last one is commodities index, which Bloomberg aggregate all this index, and then you go ahead. All right, so where was I? Okay, so we talk about the market, right? So the market, okay, so wait, let me go back and have my thoughts. Okay, we are back. All right, so saying that the deficit myth, all right, a simple question. Why does the government need to tax? All right, talk about it. All right, so because the government need to tax, anybody know? Fiscal spending? Or, anybody want to make a guess? Yeah, any answer? All right, no answer. Okay, I shall say the thing. Okay, the US government need your tax, not because they need your money to spend their way out. It's because they need to give you the money, which is the Federal Reserve, the dollar, the one, the Benjamin Franklin that you have. They need you to spend it. They need you to use it. They need you to earn for it, and then they will tax you so that you can continue to produce more physical goods in exchange for the money. So money is, in a way, money is really have a no value thing. All right. Okay. So so that's the thing that that I believe that you must look beyond that. All right. So that's the deficit. The as long as the dollar is still in the dominance, the US government as long as the dollar still remain dominant, no matter how many debts, trillion of dollars they spike out, it's not going to affect their country. All right. This the theory that I believe in. All right. The higher tax rate, the more you have to work for it, but they have to go equivalent. Interest rate, on contrary belief, interest rate is not the major one that control the inflation rate. Taxes is. All right. Think about it. The more taxes you need to pay, you need to cut down on spending. All right. Think about it. Food for thought. Okay, so currently I think for the next 2024, we are not going to have a recession. First up, because the yield curve has not inverted, has not inverted. So okay, so there's a lot of media, they tell you, oh, yield curve invert, then market will die. All right, but no. You see, the only time that the market will crash is when they invert and then they run out. All right, so this is one of the systematic you can put into your system. All right, say, hey, I will continue long equity for long term because yield curve, yes, inverted, but not above the zero, did not spike up, and then market is still on the higher low, typically on the uptrend. So I'll just continue add on to good companies, like Apple, Tesla, Apple, Microsoft, all these traditional good company, Amazon, all this. All right. For Singapore will be DBS, etc. Hong Kong will be the SOEs, banks, 1288, ABC, all this. All right, so okay, another thing, I talk about weaponized dollars, right? So any idea why US love to cut rate and then increase rate after that? they did in 1997. They just want to have inflow of money, so to buy things at cheap. They are very smart with money. They are very good with money. All right, they know how to create scenarios, and they know how to use their dollar for other countries to do their bidding, so that they can enrich themselves. All right, with a lot of products, physical products, energy. 2014 shale gas, they found, and then they try to influence the oil prices back to below $60. We exclude the energy prices in COVID that time. All right, okay. All right, so you can see that. Be careful what you wish for. If say, oh, rate cut is good for the market. On contrary, not really, because whenever there's a rate cut, what will happen? The market actually go into a very severe correction. All right, it happened in the tech bubble. They cut rate, they increase rate, they maintain the rate. Then the market goes into this, and then it's down. All right, same thing. For this is the money chart, by the way. All right, so it went up. Now we are here. All right, so once they cut, and then now Dow Jones is in a range bound market. All right, so we got to be very careful. And another thing to add, the tech is going up high because of the AI sector in play. So it's kind of like going to a very parabolic overbought scenario going forward. Okay, so back to proper. So what I'm going to use is sector rotation for equities. Spot the leading sector even during downturn. All right, so there are various methods to track the sector rotation. First up, I think the one that I think it's useful, but you need a Bloomberg terminal for this. But my friend told me that, hey, actually got a free one. All right, it's like stockchart.com. All right, or this is my preferred one actually, using various indicators on momentum and price action on the chart. All right, this one will be tedious, but because I don't really like to, okay. Bloomberg terminal has relative RRG, but I think you need to pay extra to actually use it. So yeah, but well, I don't. All right. Oh well, money. You see, even Bloomberg make us put more, pay more, so that we go more. Okay, so this is the one or chart I will use it sector. So this the one at the bottom is XLE. All right, the black one is S&P 500. And then the top one is actually the tech sector XLK. So I rank it. Utilities is actually picking up. I think utilities the next one as well. All right. Okay. So you can see, you can use TradingView to build the chart for this one. Energy is coming back, but energy is the one that bottoming out. So energy is relatively, I think US energy is picking up, but Hong Kong energy is on the contrary is going to a range bound. So you see country sector different from country to country. So it depends on what market you want to go in, but it's good to pay attention to the US market as well. Okay. So this is how the RRG look like. Because I'm not going to use it, so I'll just say just for the sake of letting you all to know how is it being like. So you can see that positive, so improving, leading, weakening. So leading to weakening will be somewhat like the tech sector. Still performing will be the utilities over here. So you can see that they are rotating in, out. So weakening into lagging. So when lagging start to turn up, is the one that that will actually pick up to see. Sector chart is the best street. Yeah, ETF, yes, correct. Okay. Okay, I see some of you have been helping people. XLE is banking. I don't know. XLE is the energy sector. All right. XLF is the banking. All right. Financial. Yes. Okay, so you can see a sector. I'll see. Okay, I'll talk. Okay, you all take a graph, or you can go to stock chart. Stock chart for that. To see. Okay. Okay, so this one I really want you to all to pay attention to this, because okay, you can take picture for this, all right, because I will want to go on. So you need a following chart. moving averages. But sometimes I use there's this thing I use. I like to use this thing called Ichimoku. Use it back in my Chimoku. Okay, MACD. I'll give you my setting later. Stochastic as well. For midterm, I don't use the default. I enlarge it. What time frame for moving averages? All this. I will start from the daily time frame. Everything default start from higher time frame, but for the this one all are daily time frame first. Okay, time frame. Okay. All right. So once you have all this, all right, you may not okay, you realize that I do have a lot of indicators, right? I do use 4, including, but what are the most important one? Moving average is the most important one. Stochastic, and then volume. All right, these 3. Or if you want pure charting, you can remove this one. You can remove this one just by volume will do. All right, volume. Always volume. I will do a separate session next month. All right. That when your guys do the Q&A, the feedback to say, hey, you can't talk, or yeah, you just say what you would like to hear. But volume is one of the one that I will talk about it in depth. All right. For this. Okay. Okay. Then next one will be on the okay. So on the chart. Okay. So on the chart, right? I got this friend who always like to start from, oh, I trade from the 5-minute time frame for FX. Oh no, then I say no, you shouldn't, because you should start from the higher time frame. For FX, I will start from daily. All right, but for equities market, especially like the S&P 500, I'll start from weekly or monthly. All right, preferably weekly. Okay, to know for the past 1 quarter, for 5 years, and then for the 1 quarter, what are we doing? Then you go to daily and see for a month, how's the trend like? Is it overbought, oversold, or some. So indicators, right? For the time frame, I don't change. All right, because it's very tedious to change. So I optimize it to daily, weekly, and monthly as well. But if you are very adventurous on this, so you can on your own setting after you have back tested and stuff like this. All right, so volume is a must. Liquidity grabbing, yes. Then you need to know about volume. All right, momentum, all these. So if you think about liquidity gapping, all this, grabbing all this, then I think you are referring to this very popular concept called the ICT. All right, this inner circle trading that's happened on I read their materials before. Makes sense, but I think that you can actually simplify it by using volume. Okay.
Very Nixon.
Yes.
Can you share what is liquidity grabbing?
Liquidity grabbing is some sort. If I can see, but what limit is I don't know if I pronounce his or her name, but pardon me if I pronounce your name wrongly. No offense, apologies. If it means that during the low period of volume, when there is when they are building up their phase to to push the market higher. All right. So if you realize that there's this famous Wyckoff theory. Wyckoff theory talks about liquidity grabbing all this. All right, it's just another fancy term. All right, you need to know Wyckoff theory. There are 4 phases. If you're interested, I can touch on it because this is what I base on it. All right, my things are based on Wyckoff theory principles. All right, law and fact, all this. So if you want to know about Wyckoff theory, put inside the note. All right. But today I have no time. But basically, Wyckoff has 4 phases: accumulation, markup, distribution, and then sell down. All right. So what is accumulation? Okay. So if you read a book by Anna Colling, imagine you sell you sell pot and pans, all right? You sell the, you know, the okay, you sell item A, all right, that is used for certain thing. You discover that hey, is that there's a business opportunity. People are selling people that there's an opportunity. So you will create something like a news, some media, right? Media and the rumors that say, hey, the thing is not doing well. All right. I think this one not useless. You ask everybody spread the word. All this they will let go. So you will once people are letting go at a tech, I as a business owner, I will accumulate the brushes or the item A at a slower pace. And then once there is like enough, and then there's more, I have more goods than the supply out there, I'll create another volume. I'll create another rumor say that, hey, you need this product A to do certain things. It'll be good. So people will be grabbing it. All right. So they'll buy. So that's the accumulation and then go into the markup phase. All right. That's Wyckoff theory. You can actually look into it on it, or is on my chat actually, Wyckoff theory. All right. Okay, so I hope that answers your question on this little girl. Hey, Nixon, thanks for asking. All right, Nixon, you since you're on this, so do you get a sense of it?
Yes,
Maybe
yes.
ask you better. Yeah.
I think it has something to do with order book with large volume at certain price point.
Yes,
And then
that's
the market pushes.
yes. So volume and large market price, you make a point. Nixon, then I will say you review your age, right? Because in the past, before electronic come in, you know how traders trade? They trade by hand signal. And then they will write in paper, and then they will know they need to see who are the people that trade by, who are people accumulating in the trading peak itself. All right. Because I have a mentor that teach me for FX trading. He's the one in 1994 he worked for Stand Chart Gold. Then he's the one who teach me all this to read the signal, all this. So
Right.
that's one.
Yeah, I think for today we will not have time to go into that.
Yes, correct.
Maybe the next couple of sessions when we even touches on volume, I think
Yes.
this will be quite related to volume traded.
Yes, correct. Volume is everything. All right. I think volume conforms everything. Like I think, and why I change, right? Certain things like moving averages, MACD, Wyckoff theory. Wait, hang on. I have this, so never mind. Okay, later I'll share a live chart, then I'll just type it in so you all can know it. All right, so okay, so before I end off to pass the time to Nixon to do some introduction, to do some Q&A or what, and Q&A will be later, but I will go in the live chart on C2 to actually go into this. But can I ask you a favor? You those who have phone, right, with QR code, can scan and then join the Telegram group. And then from there, I will do Telegram live and I'll talk about Wyckoff theory if that's thing. See, thank you, Wyckoff. Yeah, this is the very popular one. He a bit of Wyckoff. He's my favorite. Better than Elliot. What Elliot wave and Wyckoff actually come from the same branch. If you realize that the wave 1, 2, 3, 4, 5, Wyckoff is a bit on on investor psychology. Read this book called Jason Livermore, The Reminiscence of Stock Operator. You will know everything how the things. All right. Yes, I use Fibo, but I use Fibo. Yeah. But can you help me scan this group, join it, and then yep. Okay. So Nixon, to you first.
Yeah. So keep the screen, Ren. So
Yep.
those who have Telegram, you can just take a phone and do a scan with your phone, which will direct you to Telegram. And then you can join this group, which is SG Insight-MY. So this is the group where Wei Ren as well as other analysts will talk about the stocks, specifically some Singapore, Malaysia. Wei Ren, are there any other stock besides Singapore, Malaysia?
Mostly Singapore, Malaysia.
Mostly
But I
Singapore,
do
Malaysia.
have inside my report, if tomorrow onwards you read, there will be Hong Kong stock as well. All right.
Okay.
So yeah, I
So
think
basically it's an announcement channel on
yeah.
Telegram. And so
Yes.
those of you who wants to follow on the the analyst call, this is a very good channel for you to follow. So just take out a phone and scan this, and then you can join the group.
Yeah.
Right. So
Okay.
with that, let me show my slide as well. Hold on.
Sure. Stop my session.
Okay, so if you can see my slide, I also have a QR code here. This is a short feedback form for us to look at your feedback for this session. Because this session has been planned for to bring a market expert like Wei Ren to share with us his way of looking at the market and his system of trading market. So we really will value your feedback because your feedback is important as it would actually justify to management to continue to bring this webinar, charting market and the whole series of webinar under Learn from Our Pros to you for free. Okay, so if you can just take a couple of minutes to fill in the feedback form, we really appreciate that. And also at the same point, at the same time, you will be able to give a feedback on what you want Wei Ren to touch on in the coming session. We have arranged with Wei Ren, and we really want him to come back on a regular basis, maybe on every month. So we are trying to plan for a monthly session with Wei Ren so that all of us can learn together how we look at the market and also review the previous month about his market outlook and trade costs. So if you can just help us to fill in the feedback form, we really appreciate that, and that will keep the session going. And also, let me see what's the next. Okay, if you got this QR code done, I also share the I also share the URL in the chat box so that you can just click and fill in the session. So with that out of the way, I'd like to just pass the session back to Wei Ren to continue the session. Yep.
Thank you. Wait, let me, because someone asked me about Telegram link. Okay, so you can join the link over here. It's in the title. Okay, so
So Telegram link is also in the
yes, in the chat box. Yeah.
So for those who are using the web Telegram or the mobile Telegram, you can just click and join the group directly.
Okay. Okay, so never mind. Okay, so actually, I want to take this time to share why sector rotation is important. First up, because this was based on last year August, actually, not 2024. Okay, by the way, I can show you some of the charts that some of the reports I did it before. Let's see, we can start on maybe yen lot land, all this. So you can see that that actually I track all this profit and loss. It's because okay, so and then why I lost all this. Perhaps I'll just share. Stop sharing. Never mind. Okay, I will just put my yen lot over here. You can click on it, and then you can see that actually that I made a loss on it. I started it. I just want to share what the importance of sector rotation and stuff like this. So yen lot, I did have a loss, and then China Aviation Oil, Asian Partner, and then I averaged out to be 5.31% over the course of 6 months. Why 6 months is because there's an outlier. Call Guesswork after I made a call on last August, up, down, not doing well, and then after that they actually guns it on. All right, so there are some this one like AEM is a loss. Then iFast I made 8%, stuff like this. CIC Global, best call was Franken. And then Centurion, my colleague Casey actually initiated this last year, doing dormitories, and then and then come in. All right, Silver Lake as well, was a loss as well. JCNC. So despite I have a lot of losses, but most of the small caps and plus SIA and Aztec Global, Yangtze Financial Holdings, Delphi, OCBC are actually making a lot better. All right, so and August, why I choose August to show you. I want to show you August. Why? Because August last year, 2023, was the worst year that we have going forward. But this is not a portfolio disclaimer yet. All right, just to show you that I track my own performance, I track my own cost, and then when something happens, I say, hey, where did I go wrong? All right, these are nothing. All right.
Wait, when, sorry, just to clarify,
Yes.
The journal that you shared just now is for 6 months.
Okay, so basically, this one you can see is August. By the way, it's August 2023. I think there's some error for the Excel formula, so that's why it becomes 2024. But you can see that actually this for the month of August only. And then why I do 6 months, like I explained, because of best work. Because best work after that, 6 months later it jumped. So I need to average out to actually to show that the outlier. If you say 1 month, then obviously I will have beat the market, like when STI was down, actually was down 3% or 4% during the month of August. Yeah, so I need to average out and it become positive. It is positive after that for the next 6 months of that, right? Okay. Any question can just type in the Q&A and chat. All right, so listen, just don't know if I answer your question on this.
Yeah, in a way, I think it's I see that you have entry price TP1, TP2,
Yes.
right? So basically,
Okay.
maybe you want to share with us how this is, I understand, is based on your transporter.
Yes, correct.
Yeah, maybe you want to show your sample of the transporter. I know you shared the link just now.
Yes, can.
Yen lot. Maybe you can show that report on Yen lot so that
but I'll show something else. Like recent in play will be on sets. All right, so I'll show sets. And then I tell you why. There's certain things that that I will start on step 1, step 2 on this.
Okay.
All right. Yeah. So let me go to my transporter because I do have a lot. Okay. So for sets, let me see the Q&A. Okay, so for I can see for sets. Okay, so I have a buy call on both occasion, 9th of May. And 9th of May, if I believe, is the starting of the inverted head and shoulder. That saw on this. All right, so I did sets as 5. So 9th of May was here. All right, was the day I believe. Then it came down, forming a head and shoulder. Then it went up, and then pull back again. But I still maintain on my buy because I know that first up, there's some sort of building up of the volume. And one thing that I want to say is for sets, right? Since the WFS, the news that dropped 2 Septembers ago, it kept down and then it did not make any new low. All right, if you realize, and then every time it goes up, then it comes down again, goes up, come out. This is the sign that just now I thought about the chauffeur that Anna Colling talked about in her book is about buying, selling. So this is what happened. So I still believe that sets is going to break $3 and going up to the upside. First up, why is because there are some people like exiting a trades. All right, earn so much already. That's based on my based on my call on 9th of March. Over here, I have already gained a 16% over the course of 1 month. All right, so I would naturally take some profit off the table and then wait for some correction and then come down. And then there's a flat pattern. All right, remember just now I said about pattern is something that that you can look at it, but I use it often. So like a flat continuation pattern likely. So if tomorrow there's a positive price action above 290, I will initiate a buy. But in any case, I will just come down here to if there's a retracement, 265 will be the another level to buy over there. But one thing based on my indicators, long-term wise, am I long? Am I bullish? Yes, I am, because of the long-term MACD. Stochastic, this is the one, still on rising. All right, just that we have overbought. You realize that my stochastic is enlarged into a 53 period, because I want a better accurate reading on this. All right, so every time you see it crosses, it slam down. All right, especially after it break over 20 and process back on the upside, up, and then on this. So this is the only thing that may deter me from buying at the top over that level on this. All right, volume wise, okay, you see, I'm going to touch on volume a bit. Can see that volume actually has seen a slight decline, but it's still attempting to maintain above the 20 period moving average. So once it cross above, then we can see that we are likely to see a volume returning. So I'm betting that that likely sets volume is likely to return to a buy side, breaking above $3.02. Otherwise, 265 will be the best level to actually look for it. All right, and then there's one more indicator. It's called directional movement index. I shall type it here. Index. All right. Okay, so it's 8. So directional movement index, I like to look at the black line. It's called the ADX. So why the ADX is because once it peak, as long as it's dropped below 25, it means that the strength of the trend is weakening. All right, so based on all these, then I'll formulate a decision to actually go in or out. Ichimoku is the one that I've been using. So okay, basically the cloud, the Sengo span A is down, flattening this one. So it means is Ichimoku is showing majority is uptrend, but short-term wise may be neutral to slight weakness. So if I want to buy, I can take my chance, because you do not know that tomorrow there might some big buyers going to ramp up the market. If not, I'll wait for some correction down to 265 to actually buy. Or you can split your position into first buy spot at 286 with a lower allocation, and then allocate higher prices, higher allocation size at the level of $2.68. All right. I hope that give you a brief summarize on how I did. All right. Okay, because I think that initially I thought that it's going to be a very short, simple session, but I think I overestimate myself. I become very lost. I become very long-winded, so that's why it drags a bit. So earlier on, I touched on the sector rotation. You know, this is very important. All right. The first chart of my series, I will want you to do it. So if you guys like it, then I'll share more. Hey, after sector, we'll look at what should we be doing. All right. So this is the sector. This is the one stock chart 3RG. I'll post it over here. Okay. Year 2005 will continue with interest rate cut. Well, okay, so this year I think that interest rate cut will be minimal. It's just for show. All right, but next year, I do not know. All right, I do not know next year how's the market going to be like. How's the inflation data? Is very dependent on inflation data. So it's too far. So I don't want to make a guess on it. All right, so you have to the best accurate. Even the dot plot by the Fed is not accurate. Why? Remember last year around this time they said last year Q4 of 2023 they said Fed's going to have 6 rate cuts. All right, but it doesn't happen. All right, then they flip product here and there. So rather than focus on next year 2005, I focus on what the chart, what indicator. I focus on my risk management. All right, I hope that answered your question back, Brett. All right. Okay, let me see any Q&A or not. Okay, so Is that a transporter group? Yes, the one that I always post my report on is on the Telegram. Notice you don't invest in SG rate. Is it the right time to? Okay, so I will. Good question. Okay, okay. So I'll talk about REITs. Yes, I don't go into REITs because, okay. So there's this SRT. Okay, I'm going to use CSOP IH REIT Index ETF. We're going to try the methodology that we've been seeing. All right. Okay. So, all right. So, Mr. or Miss Cham, I don't know if okay. I'm going to close on Ichimoku. I'm going to use EMA. Okay. First up, trend is down. Lower low, lower high. Trend is down. All right. Second thing, you can say that it's being supported. Well, yes, you may say that, but you can see that the rebound wasn't that strong. Despite oversold, you see it made lower low, lower high, divergence, yes. But you can see that the rebound wasn't that strong. Closing below all the moving averages. So I think that there may be some downwards. So if you ask me about support, someone asked me about Fibonacci, right? So maybe I can use a Fibonacci extension tool. Maybe you just go up to 0.678 before attempting a rebound on this. All right. So everything. So let's move on. So once we settle the chart and the moving averages, all right, let's go to the MACD. So MACD, you can see the histogram is 0, signify that weak neutral. Then the line, all right, the signal line, MACD signal line, all these are flat and on the downside. All right, so it means that the CSO IH is still on the downside. Stochastic down, ROC negative zone. Volume, you can see a spike when it's selling. So likely a breakdown before it rebound. So, but I don't think a rebound will be that strong. The only thing short term may see a rebound, but I doubt it will be very strong. Okay, for this. But if you ask me the one that I think there's a chance, I think it will be kept the data center REITs. All right, on this. All right. Okay, so descending triangle. Maybe I'll just wait for buy at 1.71. Even that to go for rebound, but still on the downtrend, but it's just very flattish on it. Okay. So REITs, not much of the catalyst for now. All right, so that's why I don't advise. All right, for penny stock, always use stop loss is my learning. Yes, and okay, any stocks, be penny, big cap, all this, use stop loss. All right. But personally, I don't really trade penny because I do not know how to do it. All right. So on this, all right, good. Thank you. All right. So for Sensex India market, the market itself, let's say you want to buy even for the institutional trade outside of India, you are not able to access. The only one you can access is either the ADR in US or you can talk about it or you buy the ETFs. All right. So that answers your question. Citrum. Okay, let's see. Citrum. I think that this stock is gone. Why? It's because let me see. Okay, Citrum. Yeah, you can see everything downside. Strong double bottom invalidated. So all these are gone. Even I think you will go into 135. No overbought signal for stochastic. Even overbought come here. Take down, take a bit, then rally did not close above. Typical downtrend, everything momentum is down. You can see ADS, DM minus up, volume is up. Increased selling pressure, rejection of $2 psychological level, everything is down. All right, so Citrum is down. All right, hope that answers your question. Okay, everything down. Based on, you see, based on the sector, it means that what this stock is not in play. Okay, so what are the stock that is in play? Okay, so I show you one stock called Lei Chun. I previously I did it back then on this Lei Chun. Okay, I did it. So I think was quite last month, I think. So Lei Chun, you can see that I did in 12th of April. Entry price 0.045. 12th of April is here. All right, came up, and I keep my second target price. I think that it can go up like higher. All right, so let's do a play why I did that. Okay. Okay. Okay, so everything is high, uptrend line for 1 year. Short buying pressure started in, you can see the volume was very much supported during the 1st of 8th of June onwards, and then came down a corrective bearish flag A, B, C, and then it start to build up again. So this is the second leg of the wipe-off. So markup, consolidation, and then another round of markup. All right, there's a diagram by Wyckoff. I always like to accumulation. So I always like to use this. Okay, so if you know, right, I always like to use this phase A, phase B. Okay, just use this as a guide. All right. Okay. Okay, on this. All right. And then after that, it went up on this. So it came down and then blah 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 blah. Okay, so the rest is history. All right. So no, not yet. So I haven't touched on that. So everything is up. Stochastic is up. MACD is just on the upside. Positive histogram. And then ROC is positive. Everything is positive. Even moving average at the time of 12 April, and it breaks up a bit. So that's the thing how I spotted later. And then on this bull stick, I have a report on bull stick. Let me see. So, I think I did it recently. F90. So bull stick was oh yes. Oh, it's last year, sorry. Okay, so bull stick, I did it last year, that where we are still CGS ERMB. Okay, so still okay, let's go through bull stick. What's my basis? I rumor, according by analysts, my colleague and some of friends that I know, they are maybe going for privatization, which we are not sure. But you can look at it. Everything's up. MACD is up. All this. Are we going to buy the high? Maybe. But you can see that every time it crosses, there isn't any strong oversold. But prices still move higher. I can say that this is a divergence, but I will say that this is a range bound of stochastic, so it shows that momentum is still going strong. Correction may came down, but I will look at support at 97 cents to buy on the rebound again. All right, gap up and then breakout of this overhead resistance. This maybe double top, but 97 cents will be a level to watch out for a rebound. Also you can see that back then it went up and then volume remains strong above the averages. All right, so okay. Okay, so I hope that answered your question on this. Okay, so I will answer 2 more questions. All right, that's okay. Yangzijiang Finance, not really much move already. I think came down, it start to come down already. So volume drop dramatically. I can see selling volume, large volume coming up. So supported maybe upside until 38 cents. But I will say that I will stay out for now. But you want to do a short scalp, you can. right? Why is because based on rule base, you are above all averages, and then MACD is rising, everything's rising. Just that volume on the short term is not, and stochastic clauses right below the 80 line, so is signified that there's more downside. All right. So yellow, I will previously report range bound right now, going on the downtrend, long-term uptrend still in play for now. But I think that if open higher than 0.43 is supported, then we are looking for a further upside again. All right. Okay, so there's another one I like to talk about is that's fine, like YOMA strategic. This one also part of my transporter pick. I'll show you my thought process on how I got it. All right. Okay, so I got 2 rounds of it. Okay, so I did a first report on the 25th of April. You can see, wait, hang on, sorry. Okay, so first report was on 25th of April. So if you can see the chart, I'll use the report as a chart. Okay, so I'll just use it so you can do your live. Okay. Okay, so first up, falling wedge broke out. This really like based on all the crossover histogram at first sight. The short term show a bullish divergence already. Okay, and then broke out of the immediate downtrend line, falling wedge, strong book candle, volume spike up. And then previously on this high volume, low candle over here, bearish candle. I think I like to think there's a bearish exhaustion, especially after that a large bearish bar drop down, but volume was lower than this. So it means that this selling is exhausted. So, and it break out of first sign of confirmation. So I went up for a buy on this. So it went up all the way up to the upside. So right now we have golden cross. Everything is on the upside. So if you are in the game, I think it can go up to 14 cents going forward for YOMA. All right, so before I end, I'd like to answer one question on the chat. US continue to print money despite their huge deficit, no effect on market. I don't know what's your definition of effect. All right, okay. But you cannot think. Okay, so what I read from a book from called Budget Deficit, right, is first, you cannot think as a business. All right. Because the US is the creator of currency, the people, including the local government, are users of currency. So the creator of the currency, they create nothing out of thin air. Despite huge deficit, they don't care. It's not, as long as like what I mentioned earlier, as long as dollar is dominated in this in the market, there won't be the deficit won't have a huge impact on the equities market. Another thing why is because despite recently they cut down on their QE, they cut down the pace of quantitative tightening, means that they are slowly increasing their the fresh money, M2 money into the market itself. So that's why into the market itself, and with the new money they are going to pump the equities market, especially the tech sector. All right, hope that answers your questions. All right, so when we look at the government, we look at their news, we need to think why and how and what they did that for. All right, we need to do some calculation, look at some data to do it. All right, hope that answers your question. De-dollarization won't come so fast. All right, although there's a talk of it. China won't want their currency out in the market. If you understand monetary, there's this thing called unholy trinity of monetary theory. Means that out of the three, you only can do two. China want to have capital control, so they cannot control interest rate. They will restrict our capital outflow. So in this, there can't be the dominantization. Petrodollars, the dollarization of the petrodollars, they're not going to renew a 50-year deal. You see that the dollar, it didn't have very much strong effect. People are still going to use the dollar, all right, because there are so much treasuries in it. Imagine the de-dollarization. It is going to take a process, but in the near term, you won't have the much impact on it. All right. But you bring a point, Russia. You know that Russia asset got freeze, the dollar asset got freeze, the SWIFT account got freeze, all this when they invaded Ukraine. So a lot people around the world, they discovered that US dollar is actually a weapon. So they want to scale down, but they can't scale down as much as they want. Like, you know, one stroke of the pen, you know, I say, I'm not going to use dollar, you will be bad. And then, you know, the US famous what? Creating wars. All right, so no further question. I shall pass my time back to Nixon for that. All right, thank you. Hope that answers all your questions.
Okay, thanks, Wei Ren. Let me just share my slide. Okay, first of all, if you look at the chat box, sorry, you will be able to see the last post was a Telegram group that Wei Ren shared. So all the transporter, some of the transporter calls will be posted by the team on this Telegram group. So if you are interested, feel free to just join the Telegram group. And then, of course, do remember to give us your feedback. Like I said, it's important. And also understand that this is actually a very big topic that Wei Ren is touching on. We talk about macro analysis, looking from a top-down approach, and then looking at basically fund flow, right? Fund flow in terms of sector rotation, industry rotation, and such forth. So it's a big topic, so it's kind of difficult to share everything in detail in one session. But fear not, because we are planning actually for a series of sessions so that as you attend, you will actually get more clarity, and we will also touch a bit more on each specific steps in the coming webinar. So do give your feedback, some of the questions, and then we can customize a bit of the next webinar so that we can touch on it. And talking about the next webinar, we are planning for the next session to be on 31st July. That is a Wednesday next month. So if you're interested, feel free to just sign up. You can scan the QR code there. And let me just retrieve that URL for you for a while. Okay, I posted the URL for registration, pre-registration for the next session. So you can just register ahead so that you would not miss out on registration after this. So with that out of the way, I hope it has been useful for everyone. And we hope we have answered most of your questions. I understand that it's not possible to understand every question, but we will do our best to answer most of the questions in every session. There's a question in the chat box. Is there a recording? Yes, this chatting market will be recorded, and will be posted on the Learn from the Pros webpage.